Stock market got you stressed out? Here's why real estate is a better long-term play. Let me start here. Have you ever checked your portfolio and watched it swing thousands of dollars in one day? You already understand the problem. You're not in control. You're reacting. And that is how most people experience the stock market. Up one day, down the next. And no real ability to influence the outcome. Now compare that to real estate. Same concept, but completely different level of control. So today I'm going to break this down for you clearly. No opinions, no hype, just how these two work in the real world. Hey, before we get into it, do me a favor, like the video, subscribe to the channel, hit that notification bell so you don't miss the next practical real estate checklist built for serious operators. I am Bud Evans. I spent 35 years in the United States Air Force, 13 years as a police officer, and also served as the mayor of Cinnamints in New Jersey. Today, I'm an active real estate investor focused on single-family and small multifamily properties across 4 states. I mentor veterans, first responders, and pretty much anybody else who wants to build a real estate portfolio. I founded a low-cost property management company built by an investor for investors in New Jersey. So let's get into this. Most people believe this. Stocks are passive. They're safe. Real estate, wow, that's risky and complicated. And that is their baseline belief. Sounds reasonable. Stock, seem easy. Click a button, buy your shares. Done. Real estate, it takes effort. Analysis, management, you got to make some decisions. So people default to stocks. But here's the problem. Easy doesn't always mean better. And passive doesn't mean safe. When you invest in stocks, you become a passenger. You don't have control. You don't make management decisions. There's market sentiment, economic swings, company performance. You're just along for the ride. If the market drops, you drop. If the company underperforms, there's nothing you can do about it. You're just going to suffer, and you can't fix it. So you wait. That's the reality. I'm not saying don't invest in stocks, but let's flip it. Real estate, you're not a passenger. You are the operator, and you have control. You're going to control your purchase price, your financing, the renovations, the rent, who's going to manage it, your exit strategy. That is a completely different position. And that's the turning point. Stocks are reactive. Real estate is proactive. So let's break down why real estate has its advantages. First advantage is you have control. That's the biggest one, really. If a property underperforms, you can fix it. You can raise the rent. You can improve the property. You can cut your expenses. You can change your property management. You have levers. In stocks, you have none. You either hold it or you sell it. That's it. Second advantage, leverage. Yeah, you can buy on margin. That's not what we're talking about here. This is where real estate really separates itself. You can control a large asset with a small amount of money. You can buy a $300,000 property with 10% down. That's leverage. Now, if the property appreciates, you benefit on the full value. Stocks, you can't offer the same structure for most investors without significant risk. Leverage, used responsibly, accelerates growth. Third advantage here is your cash flow. Stocks may pay dividends, but they're usually small percentage. Real estate produces cash flow monthly. It's relatively predictable income. The rent comes in, expenses go out, you keep the rest. That income is not dependent on how the market feels. It's based on how you operate. That's a major difference. Fourth advantage is forced appreciation. This is where real estate dominates. You are not waiting for the market. You are creating value. You buy under the market value. You renovate it. You increase the rent. You improve operations. Now, the property is worth more. Period. You forced that. Stocks, you can't do that. You can't call up a company and improve their balance sheet or tell their management to step it up a little bit. Fifth advantage, there are huge tax benefits in real estate. It is one of the most tax-advantaged investments available. Depreciation, expense write-offs, 1031 exchanges. You can make money and then reduce your actual taxable income. Stocks, no shot. They do not offer that same level of flexibility. So let's address the other side honestly, because this is where people kind of mess it up. You're right. Real estate is not easy. It requires execution, discipline, systems, decision-making. you can make mistakes. You could wind up with a bad tenant. You can wind up with a bad contractor. You can have a bad deal. And those mistakes are going to cost you money. And that is the rising problem. People think real estate is passive from day one. It's not. It becomes passive through the creation of systems, not before. And that's where most investors fail. They jump in without structure. They underestimate the work, and then they get overwhelmed. Now the conflict. Stocks, yeah, they feel easier. So people stay there, even though they have no control. Real estate, it feels harder. So most people avoid it, even though it really offers a lot more on the upside. That's the trade-off here. You don't choose real estate because it's easier. You choose real estate because it gives you control. And when you apply structure, it becomes predictable. So let me try to make this real for you. If you invest $50,000 in stocks, that's great. You're hoping the market is going to perform. If you invest $50,000 in real estate, you can control a larger asset, generate cash flow, force appreciation, create tax advantages, and that is an entirely different game. Now let's pause here. If you're a veteran and you're trying to decide how to allocate your capital and build long-term wealth with control, this is exactly what we break down in the War Room with David Perret. It's why I've been a member for over 6 years. We deal with real strategy, real deals, and real execution. And if you're not active military or a veteran, when it makes sense, I offer one-off coaching through buddevans.com to help you build a plan based on your situation. Both links are in the description below. So as always, let's finish this out. Here's the reality. Stocks aren't bad. They're just limited. They're a tool, but they're not a strategy for control. They're for diversification. Where real estate is a business, and businesses are what's going to create wealth. So here's the checklist. Understand that stocks can give you no operational control. Recognize that real estate allows you to influence your outcomes. Use leverage carefully to accelerate your growth. Focus on your cash flow, not just appreciation. And create value through forced appreciation strategies. Then you take advantage of your tax benefits legally and strategically. And then build systems to make real estate scalable and predictable. Choose control over convenience. If you want to build real wealth, you need control. And that is what real estate is going to give you. Hey, if this helped you, do me a favor, like the video, subscribe to the channel, hit that notification bell, and share this with a friend if you have any. Thanks for watching. I'm Bud Evans. Aim high, execute fast. See you on the next one.